everything is starting to cost more. And
Yeah.
that's what this is really about. Most of the time, the price is the price. There may be a few things we can negotiate, but for the most part, we're just in it. If the price goes up, it goes up. But that's why we're here, is to be reviewing the numbers and planning. Not only does it gives you insight to what's happening and what's going to happen, it just takes the stress off of not having to worry about money.
Welcome to Those Odd Numbers podcast. My name is Jason Snider. I'm the founder and CEO of Main Street Financial Group. We are your fractional finance team.
I'm Summer McFarlen. I'm a CPA and certified tax coach. I'm also the co-owner of Main Street Tax Group, where we do strategic tax planning so you can keep more of what you earn.
I am Masheka Turner, and I am the owner of Bright Skies Business Services. We are your outsourced accounting firm and profit first strategies. And we are here to help you create wealth through your business by gaining clarity around your numbers.
So everybody, welcome again to Those Odd Numbers. I'm Jason Snider here, CEO of Main Street Financial, and I'm here again with Summer McFarlen and Masheka Turner. Today we have I don't know if it's juicy topic, but it's something that came up recently on a client call. Actually, it might be not very interesting, but I think it's something to understand as a business owner. What do I do with my forecasting? What do I do with my financial statements? You've put all that work, great. You've invested in, if you've hired somebody like ourselves to work with you on getting your financial statements and your forecasting in place. Okay, now what do I do with that as a business owner? So we're going to talk through some of the things that we work with our clients on and talk to them about, and how to use that investment that you've made as a business owner. And I'm going to start with a couple of things that I've experienced. The one that prompted this as a topic discussion today is we were reviewing a 13-week cash forecast with a client a couple of weeks ago, and the comment was made, it keeps shifting around. It's hard to get it. Nothing is static. And I pointed out, hey, well, that's reflecting reality, because you got customers, in this case, they're shifting their finish dates of the project. They're not approving it, et cetera. So we have to move it. And that's important as a business owner, because in this case, the cash payments are going to be delayed for that till that project is approved. That final payment isn't going to be going through. And so we need to reflect that on the forecast. And the comment I made back to the client was, well, the forecasting is just to give you guidance on what to focus on. It's an action. It's not set in stone 8 weeks out that you're going to exactly get this cash and exactly make those payments. Things are going to move around. The idea of it is to give you visibility on what's next, what's coming, and what to focus on and things. So, and then similar to like financial reports, it's the same thing. It's giving you ideas of where to focus on. And again, a good advisor for an accountant would give you some feedback, in many cases, or should give you some feedback where to focus your areas. Like, for example, hey, your gross margin's too low, you need to work on your pricing or your cost of goods, or those types of things. Those are the two guides I would suggest for the forecasting and financial statements. Summer, Masheka, had any experience with that recently, of people mentioning of, hey, it's moving around. What am I supposed to do with this if it keeps shifting?
Well, I think the pricing conversation is always a good conversation, even though it can feel scary sometimes. I think that's always a great thing to start looking at. And one of the easiest ways, first thing is, we need to be looking at our cost versus our pricing, because if there is no cushion there, or you're in the hole, that already tells you that. So but you have to be measuring it. So of course we always want to start with that, making sure that the pricing is where it needs to be. Another approach that I'm always looking at is when items are to be paid. Most of the time, I'm not going to say most of the time. There are a lot of recurring bills, and they usually happen around the same time every month. A lot of times, just because the way the money flows, sometimes those dates don't work. And so, of course, there's always the approach of asking the vendor if you can change the payment date. I have done that for vendors that I work with, and I've had clients do it. And I don't think I've hardly ever heard anybody flat out say no. most people are very accommodating if you're up to date on your account. Those are, of course, the pricing conversation, which is a bit more nuanced, but moving things around to work better with your payment calendar definitely works when you are managing that cash flow.
And I would add to the payments discussion, you can call your credit card company because that's a common one we run across, especially on the bookkeeping side, of moving the month-end close date of your, I forget the term that they use at the banks, but it's basically the date, that last day of transaction that shows up on your statement. And if you can get that out to align with the end of the month, then that shortens the bookkeeping cycle for us. So we can get it towards at the end of the month, then your financial statements are going to be issued usually by the 5th or 10th, depending on how the program or package you set up with us. Because if it's the 20th or 15th, you're adding at least 3, sometimes 3.5 weeks to the month end close. And so your financial statements are going to be that far behind until we can get that statement in and things. Because anything that is inside of that month, so let's say it's July 25th is your next statement. So that means you still have 5 days in June on that particular. And so we are not able to close the June out until we can get those 5 days in that statement to reconcile out things. And surprisingly enough, I'd say 99.5% of the time, the bank statements are accurate, but there's that 0.05% that we have to deal with. And that still necessitates getting those things. And so, yeah, call your bank, your credit card company, have them align your month end close to the end of the month chronologically, so that it should shorten your month end close as well.
Yes.
Yeah. And that's a good point too, Masheka, about the vendors, asking for a different date or something. And I'm with you. You probably got a lot more experience than I do with it, but I've worked out payment plans for clients with vendors and all sorts of things. And I've never been turned down. They just want to get paid.
Absolutely.
In distress situations, that's actually a common tactic and works pretty well. Even if there's a distress where the vendor's frustrated that they haven't been paid, they just want to know when things are going to happen. Just like we're talking about for forecasting, if something's missed payment wise, they're going to want to know what's going up. And unless you take the lead to initiate that conversation with them, you're likely digging yourself a bigger and bigger hole. The longer it goes, the less amenable they're going to be to making updates to that. Even if it's a payment plan, let's say you usually pay them every month, the bill, stretch it out over a few weeks period, but pay weekly in small payments and things like that. Almost every time, unless it's very legal's gotten involved or something like that, many times the vendor's going to be amenable to that.
Now, Jason, I'm going to say this, and I don't know, somebody in the audience may appreciate this. Sometimes when you start using words like forecasting, people automatically kind of get the eek or they get a little scared. Let's break it down a little bit more and let's tell our audience what we mean by that. And I know it may be everybody knows that, but I think let's break it down a little bit more when we say forecasting, exactly what we mean, because I think somebody has that question.
Yep. Yeah. And I think being intentional about discussing some of these items, let's get into some of the definitions, what we mean by that. And so for me, forecasting is we're trying to anticipate, if you will, into the future. Our most common methodology and the one that we use with most all of our clients is a 13-week forecast. And that's basically looking a full quarter ahead into the future. And it's a 13-week cash forecast in our case. Now, there is budgeting and other things that we do. So when we work with our clients on Profit First, and if they've had at least a year of operations, we want to get 12 months of looking back. That's been pretty accurate for us as far as being able to anticipate what's going to happen over a full year period, because we want to see the seasonality on there. And that's another reason to do forecasting, is seeing what those actual numbers are for that seasonality factor. Is it a 20% off your peak or 20% off your average? We want to understand those things because it helps guide of when you set up payments, or let's say you want to have a payment plan with a particular vendor. If you can't see that far out to the future, you could be digging yourself a hole of not being ready for those cash payments, even if you've negotiated a payment plan with a vendor. So the forecasting is anticipating as best of your knowledge at that time of what you think is going to happen. And so because it involves human behavior, it's going to be chaotic, it's going to be messy, it's going to be never perfect. And I think what prompted us talking about this is my clients comment about it. Hey, keep shifting around. And that's the fact of business. That's the fact of life. Nothing's set in stone. And
It's dynamic. It's a dynamic tool is what
yeah,
I
it's a
call it.
dynamic tool.
Yeah.
And that's what I would phrase it. How about Masheka, Summer? What would you, anything to add to that as far as what forecasting is?
Sometimes I hear, well, I have the P&L. Shouldn't I
Right.
just go on that? I have a P&L. I'm like, well, you got to get really in touch with your balance sheet too in order to cash forecast, because there are things on the P&L that are, well, things on the balance sheet that aren't on the P&L but cash is going out. So you've got to forecast that. Things like loan payments, partner shareholder distributions, dividends, things like that are going out. So people don't even look at their balance sheet. Sometimes I feel much less know what it is, but that is a very important tool in your cash forecasting if you leave your loan payment off.
And that's another thing to state is we're not trying to mimic the P&L in these forecasts.
Right.
It's inclusive of loan payments and other things like that. We're not trying to recreate exactly the P&L. So there's not going to be every single P&L account on the 13-week. We're going to have categories of things because we don't want to create all that extra detail in there because we're not creating a financial statement. We're creating a forecast. And so the purpose of it is to give enough visibility to make action steps of what to work on rather than replicate it exactly, spending all that time trying to be perfect when we can't be, because we know by next week it's going to change. We're getting it weekly. And so, yeah, there's some of those factors. And then one of the other ones is using, someone was saying on the balance sheet of the loan payments. Again, I'm not trying to say split it apart between principal and interest. I just want to recognize the cash impact of the loan payment itself because I'm not recreating the P&L like I just mentioned.
Right.
The cash impacts of things.
Let me ask you this, just because Profit First is a tool that we use, some of the approaches that we've done, of course, we usually do a 13-week cash flow also. But one of the things that we've started doing probably the last couple of years is those annual payments. So we have a few clients, they may have a big license that they pay for annually. And so what we've started doing on the Profit First side is we've started allocating that money. So say you pay it every August. We've started breaking that down so you can start putting away a portion of that every month. So when August comes around, you don't have to wonder, okay, how do I come up with the $8,000 I need or the $10,000 I need for that? Because we have included it as a part of the allocation because we know that it's happening. And I know I'm gonna say this, but that's when bookkeeping and comes back into play because you actually have the records to go back and see what happened. And again, this is not even a conversation if you don't have good records, because even though we have our bank statements and credit card statements, it is not that easy to see what items are being paid, what day they're being paid, and what items are quarterly and annually. And it's just almost impossible to see that from bank statements and credit card statements alone.
Yeah.
That's foundational. I think I'll state that as well, that all this only happens when we have good bookkeeping in place. And ideally, it's at least 12 months of data for us to work from, to build forecasting from. Otherwise, it's a lot more opaque the more of the data that's missing or not in the reconciled format that we need it to be.
You can take that to your personal life too. That whole getting ready, like I do that actually on the personal side I have a separate account set up that my real estate taxes and insurances and stuff like that get paid out of because they're kind of annual or semi-annual. But I put money aside in those accounts. I looked at prior year, I divide it by 12, see what I need to put up. I may adjust when I get my real estate notice in the spring, but that's a method that works real well. So,
right. Well, I mean, let's not forget, people, a lot of us are old school. We remember the old school Christmas club. And even though it was a few $100s a month, at least you didn't have to worry in December because you were saving up. And so that's an easy, quick way is we know that it's coming up. We can, you can worry about it when it comes, or we can be proactive.
Yeah.
And so less stress.
A lot of
Of course.
those renewals are like Christmas. They come around every year, usually at the same time. So you kind of know when they're coming.
Yep.
Yes.
On the annual side, I think for us and so our team, a big chunk of them are Philippines based, and there's an
Oh,
expectation every year. It's called 13th month, which is a full month of pay in December. It's basically almost like a Christmas bonus, and so we amortize that out for throughout the year. And employees that are with us, I think they have to be with us 6 months prior, then they get to participate in that. But we're basically withholding and setting aside throughout the year into an account just for in the month. And then
mhm.
a few times a year, I meet with my controller just to check and see where we're at with that balance and if we're in alignment with if we have new hires and other things, make sure they're in the program and we're meeting our obligation throughout the year rather than scrambling, trying to figure out, ooh, that's a big chunk of money. Where's that going to come from? Because we've got a footprint now, I think 30 team, and obviously that's very important. They bank on that for the end of the year. It's a big part of their life in the Philippines, and so that's something we want to make sure that's available. We meet our obligations, but that's our way we approach it. Like you mentioned about setting it aside throughout the year, that's available when it comes around, which usually we pay it out in mid-December, just before the Christmas break starts. So that's another example. And the other ones I can think of are, I think you mentioned about maybe big annual insurance payments. I know many people end up making
Yeah.
payments throughout the year because they don't have the funds available, so they're having to
Right.
pay
They
basically.
finance it. They finance their insurance.
So yeah, I mean, really, that technique can be used for anything. Because even though Jason's specifically mentioned Philippines, but if you're stateside and you're giving employees annual bonuses or Christmas bonuses, you can always take that approach, breaking things down and and adding it to your allocation and being proactive about a little each month versus having to come up with a large sum when the month actually hits. So you can take that approach to anything. It's just a matter of, what do I need to do?
Yeah, we try to we do our tax software that way because that's a big old fee, big old expense every year. So we
And
try to
it
set
isn't
aside for it.
small. It's not getting any smaller at all.
No, it's not. It's getting larger and larger.
Everything is starting to cost more. And
Yeah.
that's what this is really about is most of the time the price is the price. There may be a few things we can negotiate, but for the most part, we're just in it. If the price goes up, it goes up. But that's why we're here is to be reviewing the numbers and planning. Not only does it gives you insight to what's happening and what's going to happen, it just takes the stress off of not having to worry about money, which is the whole point of it all, is not to have to worry.
And maybe we can get a little bit of dive into the 13-week cash forecast. I think many of us using that with our clients. Some guidelines I've established in working with these and with clients is I'm not as concerned. Like, for example, when I see red numbers in the weeks 8, 9 through 13, it means it's something I'm paying attention to.
Oh.
Yes. But I don't want it migrating to week 2 or 3. It needs to be dealt with before. Then that's enough action. I want it done, the action taking place before, so we can update the forecast so that we see that red number disappear, or we have to shift things around. So that's a guide because I do get comments early on in engagement with clients and like, hey, there's all these red numbers in weeks 11 and 12. What gives? What's going on here? Well, I said, but that's exactly the point. We're trying to identify that ahead of time so that you can go and take action and address that. It's not the fact that it's there, it's what are you going to do about it now that you have the visibility? It's better to have it now rather than all of a sudden your bank account is short because we never did anything about it with the visibility in. That's the point, is to come up with an action plan to deal with those as soon as we identify. The point of the 13-week is to give some visibility what actions to take. So when you see the reds out there, trying to take action. Don't wait. Don't watch it. Oh, okay, it migrated to week 7, week 6. What happened? Do we have enough cash? The point is to take action. And obviously, the bigger the number, the more important and more concise the action needs to be and things. But that's the point, is to get visibility so you can change the trajectory of what those.
Yeah, some of it might even be as simple as like changing a large vendor payment or something, right? Maybe you were planning to pay it on the 1st, but it's really not due until the 15th. So you can switch
Yep.
things, switch things around. So
And that's what overall, that's what I'd say forecasting is. It's to give you enough visibility of what actions taken, similar to your financial statements, as Masheka was mentioning earlier about pricing. That's what gives us the visibility of, again, with the assumption that your bookkeeping is done and reconciled, that it's giving you the visibility around especially the pricing, because that drives everything else. If you don't have enough gross margin available, gross profit available to run your business, even though the pressure tends to show up in the OpEx area, your payroll and things, it's almost 80-90% of the time, in my experience, it's up above in your gross margin, your pricing. And that's where we end up many of our engagements, spending time with and working with them, is getting that in alignment, if you will.
Yep.
And I'm sure we could go in deeper dive. This probably should be a deeper dive in the future around pricing. I know we've had an episode before about maybe some more nuance into gross margin and cost of goods and things, because it ends up being a big part of it. That's and I leave it at there. There's a lot more we could go into without a financial statement interpretation of forecasting. But overall, I think is you spent the money doing it. It's there to give you a guidepost what actions to take around.
right.
Just watch it move around as each week and just observe it. It's for you to take action on certain things.
I agree.
Cool. Well, we will end up this episode here today. Thanks everybody for joining us, and we look forward to seeing you on a future episode of Those Hot Numbers.
Thank you so much.
Thank you.
Bye.
This content is for general informational purposes only and is based on current law and guidance as of the date of recording. Tax law and regulations are subject to change. This discussion should not be considered tax, legal, or investment advice. Listeners should consult their own tax or financial professional regarding their specific situation.